welcome to this week's weekly video update for Market Matters. Missed you last week, James. We didn't get to chat over video. You took Krabby instead of me, but it's now the 15th of September. We're well past reporting season, and we got a few changes coming through the portfolio in the last week or so. Today, we're going to talk about your commodity view. We're very overweight the commodity complex in the flagship growth portfolio. We've got Alumina, BHP, Independence Group, Oz Minerals, Santos, and Whitehaven now in the portfolio. Some doing well, some very new positions. So overall, kicking things off, James, what's your view on the commodity space at the moment?
And I missed you too last week. I did sub in Martin Crabb, who was the CIO from Shaw, who provided what I thought was a really insightful piece. So that was last week's video. But yeah, Harry, we're going to focus on commodities this week. A huge number of positions, or a large number of positions in the flagship growth portfolio in that space. So I just wanted to run you through sort of our bigger picture views on the commodity complex, given that overweight positioning.
Yeah, definitely. The hottest one first off the rank is lithium. That's been ripping. Pilbara Minerals PLS is on another tear today after a pretty good price they got for their lithium. I think that came through overnight. Where do you see lithium going here, James?
Yeah, so to give you a backdrop of where the lithium price has come, it's up nearly sixfold, given the pricing that Pilbara PLS got overnight for their cargo. So it implies spot has up sixfold, which is obviously a huge result, and there's a huge amount of interest in the lithium space at the moment. We've got Independence Group in the portfolio, IGA, that's trading up 3 or 4% today. We're fans of Orocobre and Pilbara that we've written about in reports. So ultimately, our positioning, we've got Independence Group, it's nickel and lithium. We want to increase our lithium exposure, not into new highs, but we want to increase it nonetheless. So I'm optimistic on the sort of the future-facing battery sort of commodities that plays into.
Yeah, definitely. Another one that's been pretty hot lately, uranium. We took a good profit in Paladin last week. It almost doubled in just a number of weeks there. Uranium's been pretty hot since Sprot's come in. Can that continue to kick higher, James?
Yeah, potentially it can, Harry. So we bought, this was our emerging companies portfolio. We had Paladin from sort of high 40s. We sold it at 95. The stock at the moment, right today, is 99. So to give you an idea of the trajectory of the uranium, spot uranium price, it's gone from low 30s to now being up above $44 a pound. You've mentioned Sprott there, a large trust that's going into the spot market and buying physical uranium. So that has it can go one or two ways. So they've obviously gone in and supported the market for now. That can then have a flow-on impact where the utilities sort of freak out and go on target the spot market as well, and that pushes prices higher. I probably think it's due a pause here. So that's the reason why we took some profits on our really good Paladin position. So ultimately, I think uranium at 44, it's run from low 30s. That's probably it for now. But overall, we remain pretty optimistic. And I wrote this week that we'd be a buyer again in Paladin of around that 80-cent mark. So whether or not we sold it too early, time will tell. But it was a good profit nonetheless, Harrison.
Yeah, definitely. Spot at 44. I think the equity prices were sort of pricing in a price above $60 a pound. So very punchy relative to spot prices in those uranium names pretty much across the board. Whitehaven, one we had to dip our toe into twice. With that one, we averaged in, and since then it's ripped, trading over $3 for the first time in a long time. These last couple of weeks, James, are we sticking with Whitehaven around here?
Yeah, we're going to. We had a call with management, a really insightful call a week or so ago, just around what they're achieving in terms of their coal price realisation. So they haven't got the benefit of these higher spot prices yet. So to put that into context, spot coal prices have more than doubled in the last 6 months or so. So that's obviously going to drive higher earnings. They're going to allow Whitehaven Coal to pay off a meaningful amount of debt. They say they'll be debt free by the second half of FY22. So it's going to produce a lot of free cash flow. And I know coal's on the nose, but this is a really high conviction play of ours. We own it from about 160. You made mention of it's above $3. So we're gonna hold it, Harry.
Sticking with that one, Oz Minerals. We've traded that one a lot. It's a great way to play global growth, the copper space. How's copper looking to you here, James?
Yeah, I think copper looks good here. So it's trading around $4.30 a pound. We've got targets near $5 a pound. So that's going to be a positive backdrop for Oz Minerals going forward. Sandfire is the other one that's probably the lower, cheaper exposure in copper, lower quality, but probably more bang for buck. They've got a huge amount of liquid assets on their balance sheet, cash and stock, etc., which sort of underpins their valuation. So if you've got a little bit higher risk tolerance, then perhaps look at Sandfire as well. But Oz Minerals, we're going to stick with it. We want to increase it. We've only got a 3% weighting in the growth portfolio. Increasing that would be worthwhile, I believe.
Yeah, definitely. Now to the two laggards of late, gold. Every time gold looks good over the last 6 months, it's sort of struggled to rally. Can you see this thing breaking out anytime soon, James?
Every afternoon, I look at gold in Asia when we're writing the afternoon report, and it's ticking around either side of 1,800 an ounce. It's getting quite frustrating. You think about the backdrop for gold in terms of interest rates staying low, etc., negative real rates. Last night there was a weaker print on US inflation. That puts downward pressure on US bond yields and the US dollar, which ultimately should be positive for gold. We've seen it tick up this morning on the back of that. Ultimately, I think gold does go higher. It's been in this consolidation pattern for a long time. It's been frustrating, and gold equities have been really soft. They've been underperforming the gold price. So ultimately, we're there. We've got Newcrest in the portfolio, in the growth portfolio. We're there. Would we increase it at the moment? Probably not until it starts to move. So I don't know when that's going to move. I think it goes higher, but it hasn't started to move yet, Harry. So we're staying patiently long our one gold position in that portfolio.
Yeah, definitely. Iron ore's the other big laggard the last couple of months. It's really taken a tumble. Are we seeing a bounce here? Is that going to be against the grain bounce, or are we sort of seeing a low for the medium term here, James?
Yeah, it's an interesting one. Iron ore prices have gone from $220 a tonne down to about $130 a tonne. Yesterday we saw a new low being put in terms of iron ore prices, yet iron ore equities sort of traded up below their lows. They're testing their lows again today, so I'm probably wrong on this one in the short term. But I think the iron ore equities are trying to find a low. Obviously, it's been a really big move to the downside, like it has been in some other commodities. Like I look at lumber and as an example, that's dropped 60% in the last few months. So there's some big moves playing out right across the commodity complex. Iron ore is simply one of them. I think China's the key to iron ore, clearly. And I think China, by reducing their RRR requirements, have signalled that they are likely to ease policy rather than tighten policy. Easier policy in China is a positive for the iron ore price. So to me, I think we're near a low in iron ore. Yeah,
definitely. It sounds like they've been trying to force that price lower, get set into some iron ore, and perhaps even see a bit more demand in the back end of this year. But for now, James, you've covered every little nook and cranny of commodities for us today, James, in a pretty short time. Good to see your face and good to hear your voice again.
Thanks, mate. You too. Talk soon.